All right, good morning, everyone. Tim Davis coming to you guys with another quick video, taking a deeper dive into the DXY, which is the dollar. The ticker that tracks the dollar, U.S. dollar. And looking at the dollar index, folks, it pretty much will give you a pretty much advanced inkling of what we could see for our overall markets, because a stronger dollar is not so good for the overall indices. So with that said, here is a look at the dollar and its retracement since the middle of July. In July, the dollar got as high as 109.29 on the DXY, and it had a retracement, pull back, where to just back down, and this is the daily chart, just down to its 50-day moving average, and like it had a pivot point here. So down just around a 50-day moving average, and it's starting to bounce, and look at the strong movement up now. So it looks like to me the dollar is heading for a test of this 109.29 level, and if we break that level this time, we could see a move back above 110. That is not positive for stocks. So as the dollar starts to pivot from this pivot point that it hit probably about a week or so ago, more than likely, as this dollar continues to strengthen, the overall market will continue to weaken. So a strong dollar, not so good for our equity markets, and I'll show you that here in a second. Looking at a longer term chart of the dollar, I'm gonna switch to a weekly chart. I'm sorry, not a weekly. I'm gonna switch to a quarterly chart, because the quarterly chart is really showing what we could expect longer term for the dollar, what some possibilities are, which would in turn show some possibilities for a longer term look at our overall equity market. As you could say, this bear market, folks, this bear market rally we had, it was great, but the longer term bear within the overall indices is starting to dig its teeth into this market, and it's going to be around for a while. So we always want to have these sharp move ups in a bear market rally, but when that bear market rally is over within the stock market, the downward moves become more intense after every up rally, or every long rally that may last about a month or two. The down move in the market is more intense, and I'll show you that. In a bear market, there are cycles, there are phases, and there's only about 3 to 4 phases within a bear market. There's the first big down move, and then there's a sharp up move, and then there's a retracement of that sharp up move, which normally leads to lower lows, and I'll show you that here in a second. But let's continue to look at this dollar. So this is the daily chart of the dollar, and as you can see, we're getting a nice little bounce off of this 50-day moving average, and we're starting to hit back up in an attempt to test that 109 level. So over the next couple of days, maybe next week, we could see the dollar really break out above that 109 over the next week or so. So that's something to pay close attention to, which is going to be negative for the overall markets. Now look at a quarterly chart of this tool. I've been watching this for a minute. Now looking back in time, back in 2001, which is I really think that the dollar is going to show some real strength, folks, over the next year or two. Looking back in time, the dollar got as high as 121 back in 2001 before it decided to retreat in a big way. I think that was around the dot-com bubble. That's why I say, folks, this overall markets could be in store for a longer term downtrend with some sharp bear market rallies within there, but the overall trend and overall market could be showing downward for a minute. Let's see how that pans out. So look at the TTM squeeze in this quarterly chart. Like it's just starting to show a little bit of strength. We are seeing a little bit of overboughtness in the wins percentage, but looking at price action just looks so much stronger. And the RSI has yet to catch up to the wins percentage. And forecast is just starting to get in overbought territory. So we could see a lot more strength within this dollar, and maybe even attempt to challenge this 121 over the next year and a half or so. So that's something to keep in mind. Right now, the dollar's right up to a fib retracement level on this quarterly chart. And this is a fib that I drew on about a year ago just to track the overall movement in the dollar. From the highs back in 2001. So right back up to a level that the dollar's going to challenge back up to that's a 78.6% retracement. Yeah, right back up to 78.6% retracement. So here over the next month or so, we could continue to challenge this level, which is that 110 level. If we break above that 110 level, folks, over this next quarter, we could see the dollar really break out in a big way. So that's something to keep an eye on. And we break above that 110 level, we can definitely see the overall market, stock market, the overall indices start to really take another leg higher in a bigger way. Now, again, so in the near term, looks like the dollar wants to challenge that 109.29. And just to take a look at the Dow Jones E-minis early this morning, you'll see just the opposite. Now this is a daily chart. So since we got a nice little bounce off of the lows back in early June. Oh, sorry about that, folks. Since we got a nice little bounce off of the lows in early June, we've been in this nice strong rally. Nice strong rally, even back up above his 50-day moving average on a daily chart. But look what's starting to happen. Not only do we see price action, looks like it's starting to reverse, and again on the way back down, this 50-day moving average is going to act as an area of support. So we could see price action come back down to this level of support and then try to make a stand, but we have to see what happens once we get there. But look at the wins percentage as it's starting to drop back below the overbought territory. RSI was definitely in overbought on this daily chart for quite a bit after that nice little run from June. You can see RSI has been on a steady move higher since June, all the way back up to the overbought territory, and now it is starting to dip out of overbought territory to create these lower highs. Starting to dip back out of overbought territory. So as you can see, as the market starts to show signs of weakness, the DXY is starting to show signs of strength and a possible move higher. All right, just wanted to point that out real quick, folks. Pay close attention to that dollar. See where it goes from here. See if it continues to try to make a move up to challenge that 109 level over the next month or two. All right. Have a great morning. Just wanted to point that out. If I see anything else looks interesting, I will bring it your way.